exclude some of the best days, you're down a ton, and if you exclude the worst days, you're up a bunch. So when you look at that data, looking for 2020, returns 56%, but you get rid of the 10 best days, you're down 13%, excluding the 10 worst days, up 199%.
That's pretty crazy,
yeah.
Right? But the numbers show you something, right? This is this whole idea of you shouldn't, time markets. I will say that sometimes, though, there is a feeling, at least personally for me, that I'm like, okay, that's been a pretty good run. There's a point where things get a little overvalued, and so do you kind of, think about reallocating some assets or pulling back a little bit?
Definitely about asset allocation in that strategy, having an exit plan, maybe not buying every stock and riding it hopefully to the moon, but looking at the indexing, and that's kind of the whole argument with ETFs. If you're better off buying the SPY than you are trying to time dips and trying to time entries and exits, the data show that you're better off.
23,000%, folks. That's all we're going to say. All right, coming up next in the next 2 hours of Bloomberg Business Week, we're going to hear from Goldman's David Solomon, BofA's Brian Moynihan on where we are today. Also, the Bloomberg Big Take on the global chips battle, and then the Caitlin Clark effect. Yeah, she's having a big one. And then the creator of the Big Cigar stopping by.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 1 hour away from the closing bell here on Bloomberg Business Week Live on radio, YouTube, Bloomberg Originals. Tim is off today. Bailey Lipschultz, who follows the markets and does so much more here at Bloomberg, joining me for the next couple of hours. It's an interesting day where it feels like we are truly waiting, we know, for inflation prints.
Just hanging out. It's like, if you want to buy now, feel free, but we have all the data really ahead for this market.
Yeah, and you can see it certainly in the trade. We'll get into that in just a moment. Hey, also coming up in the next couple of hours, you will hear from two big bank CEOs. Man, when they say something, yeah, it is Jamie Dimon a lot, but also when Goldman's David Solomon and BofA's Brian Moynihan say something about kind of the market environment, it means something.
Love it or hate it, they have some of the best views into the state of the economy, the state of the consumer.
Right.
They have all of this data at their discretion. They know what deals are going on, so they really do speak to the current state of the market.
I feel like it always gives us some smart metrics in terms of maybe where we go from here. Hey, we're also going to get into the Bloomberg Big Take, which is about another big trend of our time, and that is the semiconductor area. There's so much global spending. We just talked with David Gora about some of the global trends, global financial centers, consolidation, some different things going on, but we know everybody's spending big time on semiconductors.
And there are a lot of winners and a lot of losers, and that's continuing to play out in real time.
All right, speaking of the play, Caitlin Clark. We're going to get into the Caitlin Clark effect. It's real. It's changing the WNBA. A lot of different moving parts, a great story. And then we're also going to get into Jim Hecht. He's the creator of the Big Cigar. It's a story. It's real. It will remind you of Argo, that movie. Anyway, we're going to get into that a little bit later on. First up, though, let's get back to the markets and check on your top stories. Here is once again Charlie Powell.
Hi, thank you very much. And so true about that holding pattern with the S&P right now down by half a point. Little change there. We have got the Dow lower by 0.2%. NASDAQ up 0.3%. Stocks, bonds, and the dollar all seeing small moves only a few days before the key consumer price index. 10-year 4.48%, the 2-year 4.85%, gold down 1%, 23.37 the ounce, and West Texas Intermediate crude up 1.2%, 79.21 a barrel. On a busy week for economic data, earnings coming up this week from two key retailers, Home Depot and Walmart. So potentially, what could we hear about the strength of the consumer? Kayla Braun is senior economist at Morning Consult.
Well, overall, I think some of the optimism around earnings for some of these companies is really tied to what I would describe as a surprisingly resilient consumer overall in the U.S. We've seen spending hold up. Retail sales went up a little more than expected this month. And in our own data at Morning Consult, we also see stronger spending year over year.
She was interviewed this morning on Bloomberg Television. Shares today of Walmart unchanged right now. Home Depot down 1.6%. GameStop back with a vengeance, surging today by 77%. Recapping, S&P up now by half a point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Bailey Lipschultz in for Tim Stenevec on this Monday. And as Charlie broke down the market trade here, we are awaiting those inflation prints, in particular the CPI report on Wednesday. But you've been covering the markets all day today. What are some of the things or particular names that have really caught your attention?
The big thing that stands out is Apple. We've been long waiting for them to get in the AI space. We have a number of reports out that they're going to partner up with OpenAI, implement that into their technology, and it seems like that was initially really a driver for Google to trade off markedly lower. This morning we saw such a divide between the stocks because Apple has long been one of the biggest underperformers among the Mag 7 names, and now it's like they're finally going to embrace AI. It's something that investors have been kind of pounding the table for, wanting to know what Tim Cook's going to do.
It does feel like they've lagged in terms of artificial intelligence and their strategy. What's fascinating, and I always feel like I want a whiteboard because it's Microsoft and OpenAI, right? It was over a year and a half or so ago when Microsoft came out with their big, $10 billion investment in ChatGPT and OpenAI specifically, but now it's like Apple and OpenAI, and you just realize in the technology sector, right, you kind of have, frenemies, if you will. Like these are folks that compete on a lot of different levels, but when it comes to innovative technology or those companies that are disrupting, like they all kind of want to be connected to kind of figure the way forward.
And it's an interesting kind of divide because I don't know if it happens in a lot of other industries where you want to be with the best company. So everyone sees OpenAI and it's kind of like, we'd love to develop something else in-house, but Sam Altman already has such a large head start that you have to kind of grit your teeth and embrace them. And we've seen that continue to play out. And that's kind of like goes back to the whole chip dynamic where everyone's like, okay, well, maybe AMD or Intel can figure it out. But in reality, NVIDIA is where you're going.
They're already there, right? And everybody's playing catch up. That's a really good point when it comes to OpenAI and ChatGPT, right? They've already figured it out, and everybody is kind of trying to figure out their own, if you will, but they're already doing it. Apple's shares, it's something we've talked about with Abigail Doolittle a lot, down about 3%. They've really lagged. There's a lot of dynamics. There's concerns about China in particular, the iPhone, but I would say some of it is just like, where are the next growth initiatives? And you do wonder how much AI plays into that, Bailey.
And then that's been the big conversation that I have with money managers. When you look at Apple, when you look at Tesla, the two worst performers by and far among the Mag 7 names are they value stocks? And at what point do we value them as value stocks as opposed to growth stocks? Because growth has been slowing, and whether you want to embrace that or not, that does play into who's buying it and how they're valuing it relative to a company like NVIDIA. We'll get their earnings next week, but it's eye-popping growth. It shouldn't be growing as fast as it is.
There's a conversation Tom Keene and Paul Sweeney had on Surveillance. I think it was like a week, maybe 2 weeks ago, week and a half ago, and they had a guest on. And I think they were specifically talking about Apple, and they're like, what is it today, right? Is if you don't consider it a growth company, and I think the conclusion was core value, right? That there's value there, right? If you look at kind of where it's trading and how it's performed versus some of the other big tech giants, but that it is such a big player, so involved, still sells a lot of stuff, that it's kind of a core part of a portfolio.
And it's almost $3 trillion in size, but over the last 12 months, the S&P 500 is up 26%. Apple is up less than 10. So you're really lagging with one of the bigger companies. We've been talking, though, a lot about economic data.
Yeah.
And when I look at Bloomberg News has a report and cites Andrew Tyler from the JP Morgan Chase trading desk looking at CPI. So we have, as Mike McKee put it, the undercard PPI data tomorrow. They're expecting a 1% move in the S&P 500 in either direction after Wednesday's data.
No matter what.
No matter what, pick a side. Their biggest risk, they say, is hotter CPI, but they're calling it out is upcoming macroeconomic data creates a two-tailed risk. So one tied to stronger than expected growth means inflation concerns. The other is weaker growth means a recession or that word stagflation.
And which Jay Powell said, no stagnaflation, right? Like played it out really big time. Yeah. Well, having said that, Milken, and I also do feel like the narrative that we are having with investment folks has to do with the growing debt level on the U.S. federal government balance sheet. So with a lot going on around the world, we did get some thoughts from two of the heads of the biggest U.S. banks about today's environment. It all happened at the Choose France annual summit underway in Versailles in Paris. We talked a little bit with David Goro about the conversation our John Micklethwaite had with the French president. Well, earlier, Bloomberg's Jonathan Ferro caught up with the chairman and CEO of Goldman Sachs, David Solomon. Speaking of government spending and debt, that was top of mind.
The level of debt in the United States, the level of spending is something that we need a sharper focus on and more dialogue around than what we've seen. We obviously had a pandemic. We made a bunch of decisions, in that pandemic, but we're long out of that pandemic, and the spending levels, are continuing at a pace that I think is raising our debt level and creating issues for us down the road. So I think this is something that deserves a lot of attention. It's not getting as much attention as I'd like to see it get right now. We're obviously in an election year, so I'm not, I don't have my head in the sand. I don't think you're going to see that get a lot of attention prior to the election, but I do think it's something that requires focus. We need to deal with the debt and the deficits, and, hopefully there'll be a lot more discussion as we come through the election and move into the next administration.
Well, let's give it a bit of time now if we can. I often say that the United States has a privilege of behaving recklessly sometimes that maybe the likes of the Europeans do not. Have you sensed there's been any kind of pushback from the Treasury market, from investors, against the backdrop and this risk that we're talking about currently?
Well, the reserve currency is a great privilege. And, I'm not going to sit here and say that I see in the near term, a threat to that in any way, shape, or form. But it's not something that you can take for granted. And the United States' ability to spend without constraint is not unlimited. Ultimately, the market will challenge that. Hasn't challenged it yet. I'm not saying that's something that's coming soon, but it's certainly something that we should be very cognizant of and very protective of.
Do you think the experience of the UK a couple of years back was maybe a case study for what we could face in America?
Well, that was a disruption to the gilt market, and it's one of the things I think you need to be concerned about. It's a risk issue I've highlighted before. At the time, the Bank of England had to reverse its course and become very accommodative to deal with that blip in the markets. We've had disruptions of the Treasury market before. We certainly had a disruption in March 2020. To the degree that we had a significant disruption in the Treasury market sometime in the future, we don't have a lot of capacity through the banking system to intermediate that. It would require very accommodative policy. If that came at a time where that was not right for the central bank to be accommodative, that would be a risk issue that would have to be monitored.
And that, of course, is the chairman and CEO of Goldman Sachs, David Solomon, talking with Bloomberg's John Farrow at Versailles in Paris at the summit there. It was just, back in April where the IMF came out, and they were kind of stepping up their warning to the United States over spending and its ballooning debt. Higher rates, it becomes more expensive to service that debt. And then you wonder, okay, what can't the U.S. government spend money on?
Yeah, and that's the big question that I think is in the back of investors' minds, whether they want to ignore it or not, is that at some point this will have an impact. Whether or not something will break, whether or not that will actually impact investments going forward, how you can diversify not only domestically but internationally, and how some of these banks are thinking about it again, because it's a critical thing that is being ignored, it feels like.
What's fascinating is, and you're too young, but no, but I mean, for such a long time, go back many years, and I feel like every conversation in terms of investing, we talked about government debt and the concerns about it, and the government's fiscal spending, and in more particular, how much outstanding debt and what it took to service and what that means. And it kind of went away for a while, but it is back in a big way.
But that's an interesting thing. When I talk to some investors who have been on the street for 40 years...
Are they dismissive or no?
No, the people who have been on the street for 40, 50 years are saying, hey, this is something you need to think about. This is something, maybe it's not going to impact investing or the market today or tomorrow, but it's in the back of our head. Then I talk to younger investors who haven't lived through issues, and 2020 was a buying opportunity very quickly, so they're so quick to forget or at least not be aware or thinking about it as heavily, as you mentioned, as people who have been on the street and lived through some of these cycles.
Well, and you do wonder, so we're going to talk later about the global chip race that is underway and the spending that certainly the government is putting towards that in other areas. And you do wonder that if it's going to cost you more to service the government debt, right? There's just so much money that they can do then to put to other efforts that might be much more stimulative and good for the economy. I mean, when the IMF was pretty critical in the spring meetings. They said the country's recent standout, they were talking about the United States, saying the country's recent standout performance among advanced economies was in part driven by an unsustainable fiscal policy, right? And at some point, you have to kind of rethink that, especially if we have an economic slowdown, your tax base starts to slow. that becomes problematic too.
Everything was deployed in 2020, and I think that's you're coming back out of that where sure markets are high and sure there's a lot of expectation about future growth and what AI can bring, but there still is such an uncertain driver underneath the surface.
All right, so we heard from the chairman and CEO of Goldman Sachs, David Solomon. We care what he has to say. So too, what the head of another big Wall Street bank sees when it comes to the environment. Here's more from the Choose France event underway at Versailles in Paris. Once again, Bloomberg's John Farrow talking with Bank of America chairman and CEO Brian Moynihan about high for longer interest rates and how we all feel about it.
People are getting used to it. But the reality is that at some point the Fed has to bring the front end rate to get to a normalized curve, because an inverted curve forever doesn't sort of economically compute. But I think our team thinks that the terminal rate, the end rate that they'll get to will be more in the 3.5% range as opposed to 50 basis point range or 1% range. And we haven't really had that since before the financial crisis. There was a moment in 16, 17, 18 where they raised rates and they already started bringing them down to 19. So frankly, in our team, I say, if you're under 40, you've never seen this kind of rate environment, and this is normal. And so 3% front end, 3.5%, 4.5% 10-year, and people will get used to it because America did a lot of economic activity prior to 2007 for the 200-plus years of existence. So people have been used to it. It's just that we're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We're hearing from some companies that maybe there are some cracks. We heard from Starbucks, McDonald's offering a similar view on the U.S. consumer. You've got some 69 million customers. What do you see? Do you see those cracks at all starting to emerge this year?
So if you think about it, where would the cracks emerge? You talked about the average account balances. They're still, especially for households 75, 100,000 and below, the account balances are higher than the pandemic by a lot. If you think about the spending settled into a more normal, where it was in 16, 17, 18, the Fed was raising rates, inflation, they're pushing, inflation was higher, they're pushing it down or holding it steady. So that's normal. And then on the credit side, we're just normalizing to where we were in 19. So in 2019 was a 50-year low in credit costs in our company, and basically last quarter we were a little bit higher than that. And so we're normalizing, so it's increasing off a base. And people say, oh, your charge-offs are going up, but they're getting back to where they were in 19, and frankly, people thought that was very good credit, and it factually was. And so the question is where they go next. The good news is we're starting to see delinquencies flatten back out, i.e. they're not growing anymore. They normalize, and then they're staying. That's good news on the consumer side. So it's all okay. It's just higher rates are tough on people on the mortgage market. Mortgage originations are way down. Higher rates are tough on corporations using their lines a little bit less because, small, medium-sized companies, because it costs more. And if it costs more, you're going to be more judicious about it. So that kind of adjustment, what the Fed is doing with rate structure is having the impact they want. On the other hand, the economy is kind of there, and now we got to be careful we don't overshoot the other way. It's right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing. But that's been pushed out to when it occurs, and we got to be careful that we don't overshoot, because you see the consumer confidence numbers tipping down a little bit. That's what you got to be careful of. If the consumer leaves the game, it's hard to get them restarted.
All right, that, of course, is the Bank of America Chairman and CEO Brian Moynihan talking with Bloomberg's John Farrow at the summit in France, the Choose France event underway on this Monday. It's interesting, and I was looking at a survey that the New York Fed put out, and it says U.S. consumer expectations for inflation and home prices rose in April, while perceptions of the labor market weakened, underscoring an uneasy backdrop for household finances and the cost of living. I feel like all of that is coming together in not a great way.
No, not at all. And according to that story, consumers expect prices will climb at an annual rate of 3.3% over the next year after sitting around 3% for the last 4 months. Carol, it's
not 2%.
It's not 2%. And it's so interesting because you put this survey up and you put this story on the backdrop of Moynihan saying people are getting used to higher interest rates, and it feels like a very much divided consumer versus a bank executive view.
Yeah, I agree with you. And it's interesting. And I also, first of all, that was interesting when you talked about the curve. That's something that came up at Milken where people were like, hey, the curve's been inverted for a long time. And I remember Romaine and I were like, oh, yeah, we've stopped talking about that.
We forgot about it. Normalization. We just moved on, acted like it was normal.
Which is amazing. Yeah. So, it's something to think about as we go through this cycle. But I'm also, speaking of cycles, people are saying this is a much more kind of normal placing, if you will, where rates should be historically, that when it was zero or nothing, that was the abnormal part.
And that's why it's so interesting to cover markets, because coming into the year, swaps were pricing in 6 rate cuts. Jay Powell's like 3, maybe. And market's like, no, we need 6. We want to do that. We're buying stocks.
Maybe none this year.
And it seems like none makes more and more sense. And that's why it's so interesting to just track the market and track the mood of investors as these things play out in real time.
The other thing is, if though, like people have talked about, you know, some of the labor statistics, I mean, it's still very strong, but it's still like starting to see some weakness. And does it, when it starts to come undone, potentially, does it start to kind of fall fast? And I guess we have to wait and see. All right, folks, coming up, we're going to get into the chip war, the battle for semiconductor supremacy. It is on the Bloomberg Big Take. That is up next on Bloomberg Business Week. I'm Carol Massar, along with Bailey Lipschultz.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P little change right now. Traders kicking off the week on a cautious note ahead of inflation data. The S&P up by less than 1/10%. The Dow down 52, down 1/10%. Nasdaq higher by 0.3%. 10-year 4.48% with a 2-year that's now yielding 4.86%. Gold is down 1% at $23.37 the ounce. West Texas Intermediate crude up 1.1%, $79.15 a barrel. GameStop shares are surging as speculation swirls around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. Katrina Dudley is investment strategist at Franklin Templeton Investments, and on Bloomberg Television this morning, she was asked what the surge in GameStop says about current market sentiment.
For the first time in a long time, our views on like the entirety of the market, particularly from a regional perspective, have actually converged. They're the least divergent. So stock stories like a GameStop, they're exciting to people. They drive that kind of single stock mentality. And in a world where things are much more kind of coalescing around a very good theme, people are looking for the stories. And I think that's GameStop is just a representation of that.
Franklin Templeton's Katrina Dudley on Bloomberg Television. Again, GameStop up now by 78%. And Tesla has begun hiring back some of the almost 500 members of its supercharging team that CEO Elon Musk dismissed late last month. Tesla up now by 2%. Recapping, S&P down 2 points, little changed. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the war is on, folks, the chip war, that is. So far, superpowers led by the United States and European Union have funneled nearly $81 billion towards cranking out the next generation of semiconductors, escalating a global showdown with China for chip supremacy. And, folks, that's just the wave, the first wave of a lot more to come. It's a big topic, trend, industrial policy, and sign of our times, what is going on in the global semiconductor space. It is also today's Bloomberg Big Take. Here to continue our coverage on the global semi-surge, Bloomberg News U.S. semiconductor and networking reporter. He is Ian King. He is in our San Francisco bureau. Ian, great to have you back with us. The world we know is spending big time on semiconductors. Just remind us of some of the size and scope that is going on, who's doing it, and what each country's end game seems to be in all of this.
Yeah, I mean, there are a number of factors at play here. We're talking about, at least in terms of what's been announced, close to $400 billion of investments that are either being made or will be made. The end goals here are independence or greater capacity to produce something which is increasingly being seen as fundamental to economic strength and also security. And that's really what's happening here. Is we're seeing a reversal of globalization. I mean, this industry was a poster child for globalization since it first came into being in the late 1960s.
You know what I find fascinating? It's not like it's, China spending on Chinese companies in the chip space, or U.S. companies spending, or the U.S. government only spending on U.S. companies. They're allocating money around the world to facilities. U.S. government has given, money to TSMC and Samsung. Like, it's interesting that it's kind of an all-out affront.
Yeah, I mean, you've got to back winners, right? This industry is down to essentially 3 or 4 leading companies in terms of this ability to make the absolute bleeding edge technology in this industry. So frankly, a start from scratch approach just would be hopeless. If you're looking at it from the US perspective, Intel, which was the national champion for many decades, frankly fallen behind. So you got to hedge your bets. You got to give money to Samsung. You got to give money to TSMC. So that's what's happening here. I mean, you've got massive specialization in this industry as well. So you've really got to back winners.
And Ian, when I look at the article, not only are you countering or trying to catch up to China, the U.S. lags South Korea, the U.S. lags Taiwan. Are there any expectations of how they can continue to close the gap and actually surpass at least 1 or 2 of those, as opposed to trying to really catch the giant in China?
Yeah, I mean, there are a couple of things to unpack with what you said there. We're not catching China here. In terms of technology leadership, the U.S. is still well ahead of China in terms of design, even in terms of manufacturing, in terms of capacity of manufacturing certain types of more simpler chips. Yes, China is definitely making a big move and definitely is a threat in that respect. But they're still probably several years behind even the U.S. At the same time, the other part of your question, there's no doubt that South Korea and Taiwan are well ahead of where the U.S. is. And frankly, everything rests on Intel's shoulders. If Intel can do what it says it's going to do, then the U.S. is back in the game. SIA is predicting 28% of advanced semiconductor manufacturing will be back in the U.S. if, frankly, Intel can execute.
And that's a big if, right? Ian, I just think about how Intel has kind of been lapped by NVIDIA and other rivals, at least when it comes to the stock performance over the last few years.
Yeah, I mean, the stock performance reflects really what investors see as the prospects for these companies. What's really happening at Intel is they've outlined this plan, which people think is the right plan, to invest massively in technology and infrastructure and to recast their business model. That said, though, this is an extremely capital-intensive industry, and that means that in the short term, your earnings, your growth is going to be horrible, and that's really what we're seeing at Intel. They're not the company that they were, and the other companies are growing much faster, so that's where the money has gone, into the fast growth companies. Whether that is a vote on whether people believe Intel will do it or not, that's another question, and it's probably going to be a couple of years before we'll really get the answer to it.
Yeah, just want to look at stock performance within the Philadelphia Semiconductors Index. Over the last 3 years, Carol, Intel down 43%, NVIDIA up 555%, CLAC up 149%, AMD up 103%. So really a big bifurcation.
Well, and in particular, the struggles of Intel, which Ian has written so much about, and we'll see ultimately whether all of these investments, it's a lifeline for them right now, but you do wonder what will happen longer term. Having said that, Ian, you understand, I know I bring this up all the time, but semiconductor cycles, what happened that all of a sudden, everybody is spending big time? Was it the shortages during the pandemic? Is it AI? Like, what is it all of a sudden that it feels like things are ramped up in a big way?
No, I mean, you've just answered the question in at least two regards, and the other element to that is, of course, this idea of national security, that in the past we were happy with this completely diversified geographically supply chain. Then during the pandemic, we got a nasty shock. Then we got a massive sense of like, hey, these things are actually on the rise. We need them more and more as an answer to our technology needs. And then we also need to guarantee national security. And, oh, look, we're not actually making any of these anymore. Perhaps we should. Perhaps we should rekindle that skill before it disappears. At least that's been the U.S. perspective. China, economic independence, and also independence in terms of its military and security from the West. So there are a myriad of conflicting viewpoints here and conflicting drivers here, but what they're all boiling down to is like everybody's doing a DIY effort. Everybody wants independence.
And what I do wonder about, I think about TSMC. You obviously knew how big they were in terms of, kind of building the chips for the world, if you will. But I feel like it's, for the general public, it's come out over the last couple of years, maybe coming off of the pandemic. 60 Minutes has done, there's just been kind of mass market pieces on their role. What I do wonder about is all the spending, whether it's in the emerging economies, what India is spending, what Japan is spending, what might be happening today kind of change some of the longer term trends in the chip industry overall. Could it be happening? Could it be telling some, kind of more significant stories longer term?
Absolutely. I mean, we're talking about a massive diversification, about regional centers of supposed excellence and capabilities. Some of these things will fall flat on their face. There's no doubt about that. Nonetheless, the trend was towards China. That China was the largest market for these things as an end user, as a buyer, and China was pouring huge amounts of money into its own independence. The US has basically tried to stop that in a lot of technological barriers that have gone up. But you've got Japan trying to get back in the game. Japan in the 90s, when I first started looking at this industry, was the leader. So there are many things at play here. But I mean, right now, not everybody is going to be successful. And some countries like India are starting from a long way back.
Yeah, and when I look at some of the efforts that have been going on, Ian, China being slowed down by some of those restrictions, export controls, and some of those kind of geopolitical aspects. How is that shaping out, or how can that shape out who could win in some of these smaller countries and some of these regions that aren't as developed right now?
Yeah, I mean, the obvious answer for a lot of companies is if you can't sell into China, if China can't be the heartland for where you do business, then, well, let's look at where the rest of the world's population is. Let's look at where there's a lot more growth to be had, and India is the obvious answer there with its massive population, its educational base. The problem, I think, for India in terms of the semiconductor industry is you need a lot of infrastructure and you need a lot of experience, and India has none of those. those things. It has a lot of expat Indians working in the semiconductor industry, most notably in this country. But in terms of the type of infrastructure that you need, and these things are enormously sensitive, really complex facilities. Are not just slap a factory up and have some workers trained, and it really is the cutting edge. So it's going to be difficult for them to get into this industry in a meaningful way in the near term.
We say about a lot of things it's complicated, but really in the semiconductor industry, it really is. Ian, thank you so much. So appreciated. And, on this, Intel in advanced talks with Apollo Global Management over a deal that would have the investment firm providing more than $11 billion in funding for a chip manufacturing plant in Ireland. This was coming from the Wall Street Journal. Ian, of course, is our Bloomberg News U.S. semiconductor and networking reporter. Hey, we're just under 30 minutes until the closing bell. Coming up, why investors might want to set their sights overseas. Right now, we're going to set our sights on D.C. and roll the national news with Amy Morris. Amy.
Thanks, Carol. Treasury Secretary Janet Yellen says she hopes China won't mount any major retaliation against steps Washington's taking to safeguard investments in critical new industries. In an exclusive interview with Bloomberg, Yellen declined to confirm that the Biden administration is ready to unveil sweeping new tariffs on Chinese goods.
President Biden believes that anything we do should be targeted to our concerns and not broad-based. And hopefully, we will not see a significant Chinese response, but that's always a possibility.
Treasury Secretary Janet Yellen. Archegos Capital Management founder Bill Wong is on trial for fraud and market manipulation charges. He's arguing that he's not responsible for the other side losing money. The first witness to testify was Brian Fairbanks, a former risk manager for UBS, and he told the court that, quote, all the information they shared with us was lies. UBS lost more than $860 million as an Archegos counterparty. Donald Trump's former attorney and so-called fixer, Michael Cohen, is directly implicating the former president in a hush money scheme, telling jurors during today's highly anticipated testimony that Trump told him to, quote, handle it, after learning that a doorman had come forward with a claim that he had fathered a child out of wedlock. Now, even though that story was deemed unfounded, the Trump Tower doorman was still paid $30,000 to keep quiet. The controlled demolition of debris lying on the cargo ship that struck Baltimore's Francis Scott Key Bridge is set to take place later today after weekend operations were called off because of bad weather. Crews plan to use explosive to break apart fallen bridge debris so the ship can be refloated so they can clear the channel. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are trading mixed. This update brought to you by MassMutual, a leader in wealth management, offering financial advisors the best of both worlds with resources to help you run your business and the freedom to run it your way. Learn more at massmutual.com/wealth. Now, let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed with the Dow currently down 39 points. S&Ps are a little change, while NASDAQ is lower by 47. The U.S. 10-year yield at 4.49%. Gold is down 23, oil in the green. And Bitcoin, that's higher by 2.8%. Among the main 11 S&P sectors, leaders were tech and real estate. Telecom and industrials were under pressure. And leaders to the upside in the Dow, Intel and Apple, while McDonald's and Home Depot led to the downside. In deal news, Walgreens is set to contact potential buyers for Boots and Squarespace to go private at $44 per share. In other news, GameStop soared as much as 119% as meme stocks rallied today. And wrapping things up, PaySafe reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
TikTok, everybody. Just about 18 minutes left in today's trading session. Our next guest says, in general, he and his team are seeing, quote, a deeper opportunity set overseas when it comes to stocks. So let's get to it. Our Drive to the Close guest on this Monday, Ben Manash is co-founder and portfolio manager at Tourbillon in Tahoe City, California. Nice to have you here. Ben, did I say it correctly?
Spot on.
I'm sweating it a little bit here. Nice to have you here with Bailey and myself. All right, so deeper opportunity set overseas. I love that you go there. We've kind of had a little bit of a global day. We heard from the French president, just a lot of conversations from some big bank CEOs who are over in Paris. So thinking about kind of the global world, we just talked about the global chip race that's on and countries that are spending big time to develop out their semiconductor space. So deeper opportunities set overseas. How so and why?
Yeah, sure. So at the core, we at Tourbillon are global value investors. And we invest in just a handful of companies globally with a very long-term time horizon. So our perspective is always built from that bottom-up opportunity set and just weighing up opportunities globally. And really, valuation would be the first point of order as to why we see more opportunity overseas. You know, with the US market, the S&P trading at around 26 times trailing earnings, MSCI EFI, so developed international, around 16 times, and EM equally around 16 times. We think the broad opportunity in terms of valuation is a lot more attractive overseas. And that's clearly skewed by individual companies, individual sectors. So, for example, the Magnificent Seven, obviously around 30% of the S&P today by weighting, and which on aggregate trade at over 40 times trailing 12-month gap earnings. So really that's the main anchor why we're seeing opportunity.
So it's kind of like the world being on sale versus the United States, simply put?
At the most simple level, yes. And, you know, you have to look beneath the hood a little bit. And the margins and the returns on equity are pretty high in the US, which we actually think is somewhat of a risk. You know, the net margin of the S&P today is 11.6%. That compares to a long term of around 9%. And this is in the context of, you know, 3.5% inflation, sub 4% unemployment, a fiscal deficit, all things which at the margin would suggest more of a normalization, a reduction in margins in the US rather than things continuing to go upwards.
And Ben, when you're looking at that valuation discrepancy, what is a normal? Because I cover equity capital markets, and when I talk to some of these CEOs of foreign companies who want to list here in New York, it's because they get a better multiple, they get a better valuation, there's a deeper pool of capital, so that's just naturally baked in their view. What do you say to that?
Well, I'd quote Mr. Ben Graham, and always saying that over the long term, the market's more of a weighing mechanism, and in the short term, it's more of a voting mechanism. The flow of funds, and you may have gathered from my accent, I'm not from California. I'm from the UK, and we're seeing a huge number of companies either being taken out by private equity or choosing to relist in the US. We saw Arm, a wonderful company with IP and heritage from Cambridge University, choosing to list in the United States for that very reason. But over time, we think if the earnings yields are attractive enough and the quality of the businesses are good, i.e. they're able to deliver good returns on capital over the long term, we feel that'll sort of normalize over.
You came to play, and you've got some specific stocks that are on your radar, and I do want to get to them. And while you say deeper opportunities set overseas, we start with a couple of names that are homegrown here in the United States, and I'm thinking about Berkshire Hathaway, which we know you like. We just had Warren Buffett, of course, holding his annual investor meeting, so we've been talking about it a lot. It's up about 15% so far this year. What's the specific strategy or thinking here?
Yeah, so like a lot of people, I was in Omaha last weekend listening, and it was striking to see how many of the questions focused on succession and what will happen when Mr. Buffett is no longer with us. So our perspective on Berkshire today is actually it's less about how capital is allocated incrementally, and actually more about the system of Berkshire and where the capital is coming from. So if I can elaborate on that very quickly, I mean, Berkshire has created over the past several decades this mechanism which allows them to invest almost twice as many gross assets as they have book value in equity, and the funding there has come through surplus capital and insurance float, which Mr. Buffett frequently talks about, and a deserved low cost of debt. And that means, in our opinion at least, that even if the returns on the asset side, both the common stock but also the wholly owned businesses and the cash that they have, even if they're, let's say, average, 10% type of returns, you get a baked-in leverage on the equity, which will give you kind of 12% types return on equity, for which you're paying 1.5 times book and around 14 times look-through earnings, which compares very favorably to where the S&P is, and certainly very favorably compared to the intrinsic strength of the structure and the businesses that form it.
And you like AutoZone, interesting name. I want to talk about the foreign companies, though. Howden, you call it the UK Home Depot. I live in New York, grew up in California.
Kitchens, apparently, refits kitchens and all that good stuff.
What's the pitch on Howden? And I guess coming back to the valuation perspective, how does it compare to real Home Depot?
Yeah, so it's similar to Home Depot. It's always dangerous to draw these analogies. I did bring it up, but the nuance in the business is twofold. First of all, they focus very much on the kitchen market and the joinery market as opposed to broad home renovation. But the second important nuance is they focus just on tradespeople. So an important part of the business for Howden's. But that focus on trade is really important because that relationship is much stickier, but also tradespeople value proximity to work much more than normal DIYers tend to. So Howden's they have around 33% market share of the kitchen market in the UK, but close to a monopoly with tradespeople. There are over 800 depots in the UK. So if a tradesman is missing a certain piece, a cabinet or something like that, they can be at and get to a Home Depot very quickly. That means they're able to generate very, very good margins, around 60% gross profit margins, even better than Home Depot. And the price is great. It's just comparing it. It's on around 16.
Fun to go into different companies. I agree with you, Belly. Like, I love going to other places. Ben, thank you so much. Really appreciate it. Ben Benesh there joining us, giving us a couple of names from Tourbillon Investment Management. The close just about 10 minutes away. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pella. Tesla has begun hiring back some of the almost 500 members of its supercharging team that CEO Elon Musk dismissed late last month. Musk's dissolution of the team stunned the broader electric vehicle sector. Tesla right now advancing 2.1%. Bank of America CEO Brian Moynihan says American consumers, helped by wage growth, do remain in good shape, even amid elevated interest rates. He spoke with Bloomberg Radio today in Paris.
If you look at the spending, through the month so far in May, they're spending about 3 or 4% more than they did last May, in the first part of May. April was similar. It's slower. It's more consistent with a lower growth, lower inflation economy, but it's still positive. And positive means people are spending more. That means our economy is growing.
And in that interview, Bank of America's Brian Moynihan spoke with us all about French business at Versailles. He also told us businesses are once again looking at mergers and acquisitions. Bank of America shares, they're down today by 0.4%. Big move for GameStop shares. They are surging as speculation swirls around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. Right now, GameStop is up by 72%. Sources tell Bloomberg Walgreens Boots Alliance is reaching out to potential buyers of the $8.8 billion Boots drugstore chain in the United Kingdom. Those sources say the Deerfield, Illinois-based company is working with advisors to hold early-stage discussions with would-be bidders. Today, Walgreens Boots Alliance up by 5.5%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, this is Bloomberg Business Week. As you know, Tim is off this Monday. Bailey Lipschultz with me. He, of course, keeps a watch on the markets pretty regularly here at Bloomberg. You eat, drink, and sleep it. We just got about 5 minutes to go. We're going to head over to our TV colleagues in just a moment. But it's on a day where it's kind of what I would call a meh day. You know, it's just not a lot happening. And I think we're just, again, we have said it a million times, we're waiting for the inflation print.
Yeah, pretty much straight down the middle. You've got tech outperforming a touch with the NASDAQ 100 up, call it 0.3%, S&P down 2 points, and advanced about 215 of the 500 names advancing, but even volumes are 17% below normal over the last 100 days.
It feels a little bit mellow. Yeah. It really does. If I look at the major industry groups in the S&P 500, there are 11. Infotech is up about 0.5%. Real estate's up about 0.3%. We talked about REITs earlier in our broadcast, but the other 9 groups are all lower. Not a ton. Industrial's down the most, about 0.5%, but nonetheless, it's just kind of, trying to figure out our way forward here.
Wait and see for the economic data. We do get earnings, Home Depot among others this week, and then next week the big one will be NVIDIA. But again, so much economic data, so much of a focus on what the Fed is going to do next, and that's going to drive markets.
Yeah, Liz McCormick's saying it. Like when it comes to the Treasury trade, the bond market, we know it's all about the inflation prints at this point. And, you know, we'll see whether or not we get a significant read on Wednesday. You said that there was a story, or you had talked to somebody, that doesn't matter which way it goes, we're going to get a 1% move either up or down.
That's what JP Morgan's trading desk saying. 1% move no matter what is baked into the options. So that's what options show us, but obviously, we've seen it play out where the options show a big move expected, and then nothing crazy happens. But
well, exactly. But it is, you know, there was a survey too that we talked a little bit to earlier from the New York Fed that talked specifically about U.S. consumer expectations for inflation and home prices rising in the month of April, and consumers expecting prices to climb at an annual rate of 3.3% over the next year after hovering around 3% for the past 4 months. That marked the highest reading since November. What I just think is interesting is we focus so much about that 2% rate that the Fed says we are going to get back to. They're not giving up on it, and yet consumer expectations are for something more. It's just an expectation, but it's just another read.
Still, though, mood drives movement, mood drives spending.
Nicely
That's a
said.
Peter Atwater quote. Shout out to him.
Love Peter Atwater.
Yeah, me too.
Yeah, no, sentiment is a big thing. All right, folks, just a few minutes left. We're going to head over to our TV colleagues, counting you down to the close on this Monday. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. We're counting you down to the closing bell. Here to help take us beyond the bell, it's a global simulcast. Scarlett Fu in the TV studio, Carol Masser in the radio booth, Bailey Lipschultz in for Tim Stenivek on this Monday afternoon. Welcome to our audiences across all of our Bloomberg platforms. Carol Masser, a somewhat tepid day on the surface, but some big individual movers out there, and of course a big week ahead with some big earnings and a big inflation report on tap.
Sounds like you're hinting about GameStop, which is definitely one of my gainers in today's session. We'll talk about that later. I do feel like, I said to Bailey, it's a meh day in my mood. I feel like I kind of want to rip the Band-Aid off and let's just get to the CPI report on Wednesday.
That's what I've been saying.
Go girl.
We've seen JP Morgan came out the trading desk saying they expect a 1% move on Wednesday, so it feels like all the fireworks will be later in this week, starting with tomorrow, PPI data, which Mike McKee calls the undercard, so it's going to be a busy week, Carol.
Yeah.
You know, I mean, so it goes to follow that, of course, everyone's going to get all worked up about these meme stocks, whether it's GameStop, whether it's AMC. There's really nothing else going on as investors wait for the big CPI report on Wednesday.
Yep, that's why positioning is going to be really interesting, I think, as we head into that, right? Like, have we shaken out enough? Are we neutral enough? We can actually see some movement.
And we should point out, too, I mean, we talk about the big movers here and sort of what really is driving the market. I mean, I was looking at the number one mover in the S&P, and this dovetails with the conversation Alex and I were having with Sherry Paul over at Morgan Stanley, the idea that there is a a strong bid into stocks that have dividends, have buybacks, and basically some form of income or cash return. And you saw that with Insight up 9% here on the day, and that's largely because of that big share purchase authorization, $2 billion there. So that remains part of the single stock story as a lot of folks wait to see whether there is a broader market story with the macro data in the middle of the week. On the day, the Dow Jones Industrial Average is going to finish slightly lower here, down about 0.2%, or roughly about 80 points lower. The S&P 500 lower by just a point or two, so basically call it unchanged as we wait for these numbers to settle. The Nasdaq the Nasdaq Composite higher by about 47 points, or 0.3%, and the Russell also clinging to gains on the day, higher by 2 points, or 0.1%.
All right, as you said, kind of meh, but if you get into some of the individual names, you're right. It's kind of interesting. GameStop is certainly one of, I feel like, what is the pandemic back? You got GameStop up at its highs, folks, up almost 119%, finishing the day with a gain of more than 70%, 74%. Speculation swirling around a return to social media by Keith Gill, who drove the meme stock mania, of 2021 under the moniker Roaring Kitty. I just like saying Roaring Kitty. Who doesn't? Really tough, though, on short sellers who probably have had to do a ton of covering. More than $1 billion loss after the company's share price roughly tripled this month, so a lot of short covering on that one. Let's get to Moderna, folks. Up about 7.5% in today's session. It's the number 2 gainer in the S&P 500, number 1 gainer in the Nasdaq 100. Gotta say, no market-moving news that I could see, and it's up about 25% year to date. And then real quickly, Walgreens Boots, also one of the outperformers, up about 5.6%, off its high of about 8.5% in today's session, but finishing again a gain of about 5.6%. Said to be reaching out to potential buyers of its nearly $9 billion Boots drugstore chain in the UK, according to folks familiar. You might remember the company last year revived discussions on a potential exit from the chain almost 18 months after scrapping a planned sale. That was some news that Bloomberg did back in December. Again, the number 3 gainer in the S&P, Scarlett, and the number 2 gainer in the Nasdaq 100.
You know, it was interesting because earlier on I was checking, and the gainers and the decliners in terms of industry groups was pretty much evenly split. But by the close, we have a lot more decliners. None of these are moving by a lot in terms of sector performances. So let's just take a look at the laggards here. You've got industrials, financials, and consumer staples. They're each down by at least 2/3, or I should say, a quarter of 1%. The worst performers are industrials, losing a whopping half of 1%. On the flip side, tech and real estate investment trusts doing better. They're the only sectors to finish in the green.
Yeah, just before we go into the decliners too, I was looking at some of the gainers, and one interesting story I thought was that pop that you saw in Squarespace, which was basically on the back of a take private deal. And it's kind of interesting too. We talk so much about the IPO market opening up. At least Lynn Martin at NYSE believes that. But you've had so many companies now that have gone the opposite direction here, and you kind of wonder whether that maybe starts Bailey another trend.
Yeah, Romaine, we've seen the number of publicly traded U.S. companies be cut in half from the late 90s. So one thing to definitely keep an eye on as we see M&A play out. Talking about decliners, though, want to start with Duolingo, down closing at the lowest level since February.
Did you say Dua Lipa?
Duolingo.
No, okay. Just checking.
Big fan of Dua Lipa. I don't have Duolingo, though. I don't know if you guys do. There's a lot of uncertainty around generative AI, whether OpenAI's technologies can impact people wanting to learn new languages and whether they'll pay to learn new languages. So that's why we're seeing shares of that company under pressure. Another company in an area that's near and dear to my heart, biotech, Cytokinetics dropping at 1.10%, closing at the lowest level since December, coming after drug developer data on their heart drug, missing expectations. Truist saying the sell-off was overdone, pared back the losses to 6.8%, but nonetheless a slope down into the right for what's now a $6 billion biotech. And to cap it off, want to call out Bank of California, shout out to my state, my home state, missing expectations in 1Q, EPS restated lower than expected. One thing to keep an eye on as we've been kind of charting what's going on with some of these regional and smaller banks, does seem like Bank of California, with some of their accounting, restating that 1Q EPS lower than Wall Street was looking for.
And if we're going to yields, guys, it's boring. Let's just move on. I mean, there's nothing happening. I feel like we're just coasting by here. We're going to wait and see what happens with CPI. If you have positioning basically sussed out enough, then maybe you see some movement in the front end if you wind up seeing an overheated inflation data, but maybe the real action is going to be just a range bound in the back half. That's what Subhadra Rajappa, Sakjam, was talking to us about. But that's a snoozer, so we can move on, Romaine.
Yeah, I mean, that's certainly going to be a big catalyst here. We did see volume pick up in that space, but it raises the question here as to what people are actually positioning around. Are they scared? that inflation has sort of reared its head? Are they still focused on corporate fundamentals, which are, I guess, decent depending on where you look? Or is it going to be something else that drives it, like geopolitics?
Yeah, or, meme stocks being back in favor.
Are they back in favor? I hadn't heard.
It's just it's one day, trade, but GameStop, as I mentioned earlier, up 74%. I'm looking at AMC, they're up about 78%. So, I don't know what to say on these. Is it just kind of a game, a play? I don't know, but it certainly catches everybody's attention, Scarlett.
It's a nice distraction while we wait for PPI and CPI, and of course
the real stuff.
The real stuff, yeah. What's interesting, of course, this time is you've already had 3 months where inflation came in hotter than anticipated. So the question is whether we're going to get that again, and if inflation does moderate, as the optimists are hoping, what's going to provide a greater upside, bonds or stocks? And that's an open question here.
Yeah, it's an open question, too. It's interesting, though, too, about this whole memes, everything that we saw today with AMC and GameStop as well. I mean, it seems to get to this idea, though, that there is a little bit more risk appetite than maybe what we've seen over the last year. Because I feel like we've had a few iterations here where you've seen something, maybe not as quite the big monster X post that Roaring Kitty made, but you didn't get the same reaction in the shares on some of those days. And I sort of wonder what's different about today, Bailey.
Romaine, it feels like people want to generate alpha. When I talk to pro money managers, not only the retail crowd that's late to these games, late to some of these moves, it's an easy way to game the system. You can flip some call options, you can buy some stock and assume that Roaring Kitty, like he did posting multiple times on X, can continue to drive someone else to buy the stock, again, in a day where we ended up basically unchanged.
And this is why the top story of the day was thumb wars that happened in Bavaria. Did you guys...
Finger wrestling!
I mean, you can talk about S&P earnings estimates, but come on, this was thumb wrestling. This was a whole thing. The AP reported it. It was amazing pictures. These guys have warm-ups for their thumbs. There's a whole contraption that you do. This was big deal.
I love this story that it actually explains what it is. In each round, 2 competitors sit on opposite sides of a solid table and each hooks one finger, usually the middle finger. It's just like we all played it as kids, right, Scarlett?
Absolutely. I wanted a video to go along with this story.
This is a German championship at Finger Hockland, or finger wrestling, that happened in Baron. I'm just saying. That's why that's the top story, because it's hard to make hay out of a day like today.
I'm curious, why is it the middle finger? Is that the stronger finger?
I don't know.
I mean, I've used my middle finger a lot, but I didn't know it had any real strength.
This is how they've done it for years.
Yeah.
Apparently, they would settle disputes back in the olden days using finger wrestling, and this is how it was done. This is why it's a tension between bond and equity investors.
If you injure the middle finger, it's not the end of the world. If you injure your thumb, that's a problem, right?
Oh, that's an excellent point.
I don't know, just a theory.
It depends. What do you use your middle finger for?
I'm not touching that one.
I feel like I'm in the movies of the olden times, so they were arm wrestling, right? So
don't shake
arm wrestling is the thing.
This is how they actually got.
Is that Lederhosen that they're?
Yes. Yes, this is why it's amazing. Thank you for reading this article, Carol.
I loved it. I am so with you. All right, everybody.
I don't know what's more alarming, that we're talking about this or that Carol actually held up a printed copy of the story.
I like paper. Yeah. I know, it's not.
No, what's more upsetting is that everyone was like, we're not doing the story. And then I'm like, I'm doing the story.
And the face of agony on them. I mean, oh my God. All right. That's a wrap. That's our Monday wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, no more finger wrestling, but we are going to kind of stay with sports, that's for sure. Bring up college or professional basketball or this year's March Madness, and yes, you are going to talk about Caitlin Clark. And yes, because of how incredibly well she plays, just unbelievable. Also, though, the impact she is having more broadly on ticket sales, on TV deals, and perhaps even on pay. This story on the Bloomberg and at Bloomberg.com/businessweek with more on the Caitlin Clark effect. Bloomberg News Business of Sports reporter Ira Boudouet here in our Bloomberg Interactive Broker studio. So great to have you here. Great story, deep dive. She is the player that I feel like whatever sport you're talking about, she comes up. What is so different about her? What is it? Is it her star power? Is it something more?
You know, it's interesting. I spoke with Michael Mulvihill at Fox. He's sort of in charge of their analytics and research, and they had a lot of Caitlin Clark games over her college career when it grew from an audience of tens of thousands to an audience of millions. And he said, we still don't really understand what happened. But I think
I go on Instagram, just watched her practicing, and just sat there and watched.
I think it's a combination. I mean, she's an amazing scorer. She shoots deep threes. We saw with Steph Curry that this became a phenomenon. People love three-point shots.
Yeah.
They love guard play in general. And I think she came along at the right time. And she just seems like a charismatic person. So, I think all that put together created this phenomenon.
And her season openers tomorrow, they already sold out in Connecticut, right? And we're seeing potentially some of these venues going to shift to larger areas to fit more people. How does that change kind of not only her star power, but the potential growth for the W, just given how it's been in the shadows of the NBA?
Yeah, I mean, every metric you want to look at, she really has a major impact. So what you're referring to, there's two teams already that the Washington Mystics, Las Vegas Aces have said, we're going to go from our normal home venue when the Indiana Fever, Caitlin Clark's new team, when they come to town, we're going to a bigger venue because we can't accommodate all the demand for
So other teams
tickets.
benefiting as a result.
Yeah, I mean, it should be really a league-wide bump. And also, more importantly, probably in TV ratings.
Is it similar to the Messi effect? Am I going a bridge too far in what he did for the MLS, where people are buying and reselling tickets and it's the hottest ticket in town?
I think in a way this is bigger because Messi is like this known quantity who is basically coming to the MLS at the end of his career for a kind of tour, right? And it's a chance to see this known great in person. With Caitlin Clark, no one quite knows where this can go.
Yeah.
But if her whole career with the WNBA is a spectacle, then that changes the entire profile of the WNBA as a league.
Ira, how do you think about it as, we've had other incredible female athletes, if I think of Serena Williams or Serena Venus, but is it because she's a woman, and what is it, does that another component to it?
I think so. I think there's this idea that we have not seen a scorer like this in the women's game.
Okay.
There's also the fact that in college now for men, they're one and done a lot of the time. The very best players, because the NBA's age limit is 19, they don't stick around. They don't build these identities. They don't break these records. They don't become household names maybe until they get to the NBA. She did at Iowa all of that work of becoming a celebrity, and she's bringing that to the WNBA, which is a different phenomenon than we've seen on the men's side in a long time. A lot of people compare it to Magic Johnson, Larry Bird, 1979. Their rivalry at Michigan State, Indiana State exploded interest in the college game. They come to the NBA, and that raises the NBA up. So I think that's the expectation, that maybe we'll see something like that now for the WNBA.
And what does it mean that she's in a market like Indiana, though? You think about star power, you think about marketing dollars. I talk to people who work in the NBA, and athletes are so much more marketable in LA, in New York, in Philadelphia or Boston. Indiana?
Yeah, it's interesting. I think on the one hand, it probably matches and fits. She's from Iowa. She went to school in Iowa. She, I think, feels at home there. Indiana is a basketball-crazed state. And I think the league, talking with Kathy Engelbert, the WNBA commissioner for this story, she said one thing that's interesting about our league is, in the NFL, people follow teams. In the NBA, people kind of follow stars. In the WNBA, they follow the league. And there's only at the moment 12 teams, so you can kind of do that. And so really the Fever is just kind of one of 12 places in the WNBA, which is a nationwide attraction, is the idea.
You mentioned the league, and in your story you write how Clark's arrival comes at a key moment for the league. Why is it such a key moment?
So they are right now in the process of negotiating some of their biggest media deals, we think, because they package a lot of it with the NBA, which is right now looking at extensions with its partners and maybe bringing in Amazon. So the WNBA is part of that. So there's leverage there because you can say, look, what you're buying now is a piece of the Caitlin Clark effect. And they have timed it so all of their deals are up in 2025. So they're going to have the next 18 months to say, hey, look, now you got to pay Caitlin Clark prices for our rights. And at the same time, they probably will be negotiating a new collective bargaining agreement because the players have the option to opt out at the end of this coming season, and probably will. And so more money coming in from TV, et cetera, but probably also real demand for better pay for players.
Can we talk about that?
Yeah.
I mean, as you remind us, and the WNBA's collective bargaining agreement, let's see, Caitlin Clark's going to take home around $76,000 a year.
Right.
In her first year. For the NBA, $12.2 million.
For the top draft pick, right?
That's quite a gap.
Yeah, I mean, it is stark. I mean, the WNBA will tell you, look, we have these programs, these marketing programs with the league and with the team and other incentives that allow a player to make up to $500,000. But still, even so, it's less than the minimum pay in the NBA. And
was it just to be fair,
Right.
and we are Bloomberg, we're real smart about this, was it more fair because there weren't the TV rights and so on and so forth? Like, give me some historical perspective.
Yeah,
I'm never going to...
It's a really hard
but
question,
you know what I mean.
But if you look at, I think, this collective bargaining agreement that governs her pay now was signed in 2020.
Okay.
And at the time, the league, everyone drove the hardest bargain that they could. So
Yeah.
the players maybe didn't have the leverage to say, we need more. That said, they are underpaid, even if you look at the historical standard by which NBA players grew. So the WNBA is going into its 28th season, right?
Yeah.
At that same point, the highest paid players in the history of the NBA back then would have been 1972-ish Kareem Abdul-Jabbar. He was making inflation adjusted a couple $1 million, right?
Okay.
Nearly $3 million. So
It's a
even if
gap.
you go back and do that comparison, the women are underpaid.
So does she move the needle?
Yes, I think for sure. I think the only things that maybe slow it down are just like the unforeseen, injuries, and you never know. But it looks like she's the real deal. Everyone says she's going to be able to compete, and I think that just at least for the next couple of seasons, it's going to drive interest to the league.
Can I come back briefly to the rights agreements, though? So,
Right. Yeah.
What are those conversations going to be like? Because if you're a rights provider, if you're a broadcaster, and you're wrong, like say Caitlin Clark doesn't pan out, or she takes longer to adapt to the W's pace of play and playing against stars night after night.
Right.
How are they trying to game that out? How did those kind of conversations work out, just given you could strike a gold mine and get a good deal, or if you sign for 15 years, you're stuck holding a bag and paying up for games?
Right, and I think this is an instance where the relatively low base actually helps the WNBA, because they have 4 nationwide media partners. They make about $60 million a year total from that, which is really small compared to the total package for the NBA, which is in the billions. And so if you double that, which Kathy Engelbert has said is her goal, you're talking about $120 million, which is not going to break the bank at Amazon or any of these other places. So they can
Right.
take that risk, I think.
And she's doing okay on her own, though, right? Lining up deals. Just got about 30 seconds.
That's right.
Nike,
Yeah,
some other
Nike,
things.
28 million, I think, is the number, which is the biggest ever for a women's basketball
She
player.
paid like $4 million on NIL, right? I know we're
That's the estimate. People say around 3 million. That's what she would have been taking in. I don't think anybody's actually seen those deals, but yeah, that's what she would have been worth just as a college player.
Yeah, more to come, no doubt about it. We'll all be tracking it. Really great deep dive. Thank you so much.
Thank you.
Really appreciate it. Bloomberg News Business of Sports reporter Ira Boudway joining us here in our Bloomberg Interactive Broker studio. Caitlin Clark's story, I got to say, it kind of reads like a great streaming series already, and she's still got a lot of years ahead of her. Streaming is where we're going to go next. The upcoming debut of The Big Cigar is coming up on Apple. We'll explain that story next. I'm Carol Massar along with Bailey Lipschultz, and this is Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. Stocks kicked off the week on a cautious note. S&P down a point today, 52.21. Little change there as traders position for key inflation data. Today we had the Dow down 81, drop there of 0.2%. NASDAQ, though, very mixed market, up 47, a gain of 0.3%. 10-year, 4.48%. The 2-year, 4.85%. Spot gold today down 1%. At 23.36 the ounce. West Texas Intermediate crude up 1.1% today, 79.13 a barrel. GameStop shares surged today as speculation swirled around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. Today, GameStop up 74%. Recapping, S&P down a point, little changed. I'm Charlie Pellet. That is a Bloomberg Business Flash.
The story I'm about to tell you is how I, Huey P. Newton, the Black Panther Party founder, was set free into a prison.
All right, everybody, the Black Panther Party, a fake movie production, and a nationwide manhunt. That is the story of Huey Newton, who's the subject of a new limited series debuting this Friday on Apple. Behind it all, and back with us, Jim Hecht, creator of The Big Cigar. You might recall last time we talked with him was about his TV series Winning Time, The Rise of the Lakers Dynasty. We are so delighted to have Jim back joining us from LA. How are you?
Hi, Carol. Thanks for having me back. I appreciate it. It's good to be here.
It's great to have you here. First of all, Huey Newton, he was the subject, from what I understand, of your graduate thesis back in 1999. Tell us how and why that he was an individual that really caught your attention.
I mean, I was into like participatory democracy, political theory, civil disobedience, nonviolence, civil disobedience, and social movements. And I heard about this guy, and I just thought he was incredible. I couldn't believe what he had done, and the way that, a college guy at that time got into a law book, went out in the streets, and changed the agenda, changed the dialogue about everything. I just thought it was incredible. And then when I decided to go to film school, because I thought that was sort of a better way to change the world than law or politics, I heard this story about how he escaped the FBI manhunt after he had been framed for a murder and got to Cuba. And I just thought that was the coolest story I'd ever heard in my life.
And it has shades of Argo. So how do you write, direct? Like, were you inspired by what Ben Affleck and the team did with Argo? Like, how did that fit into how you were crafting this?
Right. So like she said, I wrote it as my thesis script at USC in grad school in 1999. And then I kind of put it away. I went and worked on the Ice Age movies. I was working with talking animals a lot. But this is what I always wanted to do. And so when Josh Behrman, who is a friend of mine, stole the story that ultimately became Argo to Smokehouse, to George Clooney's company, I was like, I have something similar. I think it's better, cooler, better characters. And he sort of took a look at what I had and agreed. And so that was 2009, maybe. And then he started working on the article, and we couldn't find Bert Schneider. Like, he had produced all these movies, Easy Riders, Last Picture Show, 5 Easy Pieces, The Monkees, and he had just sort of disappeared. His house had burned down. No one knew where to find him, so we were about to give up. And then I used to write at night a lot, so I went to Swingers one night at like 3 o'clock in the morning, and they were kicking out this older, unhoused gentleman with a walker, and he dropped money on the floor. And when I bent down to help him pick it up, I saw the eyes, and I was like, oh my God, you're Bert Schneider. And he was like, yes. Tell them who I am. Tell them what I did with Chaplin. And we sat in a booth. He was living in a one-room motel next to Swingers Diner on Beverly.
And so I've just always am fascinated with the decision-making behind this. What made you not want to make it a movie? What led to landing on a short series versus a traditional film?
Yeah, that's a great question. And we had originally approached it as a feature. But it was like there was so much more character and story that we wanted to tell, particularly the story of the Panthers, Huey's backstory. And in a 2-hour format, it just started to get crowded out by all the caper stuff. But in a longer format, 6 hours, 8 hours, we saw that we could sort of, I don't know if you've seen Escape from Dannemora, but sort of use the caper as a thin level of story at the top, and then use, but most of it is about these people and these characters and their relationships. So it just seemed like a limited series was a better format to do that.
We'll talk about the relationship, though, between Bert Schneider and Huey Newton.
Mm-hmm. Yeah, Bert saw Huey and was like, this is a guy who had discovered Jack Nicholson in Easy Rider, and he was famous for sort of supporting talent and letting them do what they wanted to do. He never went to set, famously, and he saw Huey. He's like, that guy's a star. And he aggressively tried to seek out Huey and try to get involved with the Panthers. He wanted to give them money. Huey was wary of him at first, but ultimately they did start to work together. And Bert would, write checks for Panther programs and sort of stay out of the way, like he did with his movie productions. And the friendship blossomed from there. They stayed, friends, very close friends until Huey died.
Mm-hmm.
Bert was in his wedding, and it was a close personal friendship.
Well, tell us about the tale of, and what just give us a little bit of a tease of what someone who watches The Big Cigar, what they will see, and what this story is all about.
Yeah, to me, the thing that's cool about it is a portrait, a nuanced, I think, portrait of a revolutionary in crisis, which is something that you don't see often. I don't like to do hagiography. Like, I don't think it's helpful for people to see perfect people do incredible things. I think it's helpful to see people that have human issues like we all do incredible things, because then you can do something too. And Huey, he spent 3 years in solitary confinement, which we now know is a form of torture, for shooting a police officer who shot him. And the conviction was ultimately overturned, but he comes out of prison. He has all this probably PTSD. He's an instant international celebrity, which he wasn't when he went in, and the FBI is pursuing him 24/7, basically trying to kill him. But and it's sort of a slow motion assassination attempt, where they didn't just walk up to him and shoot him, but they tried to drive him insane. They pitted Panthers against each other. They wrote fake letters between leaders, and made phony phone calls from rival factions. We're going to get you. They bought the apartment next door. They would break in, all the time and wake him up with a gun in his face. They staged a shootout in the hallway of his apartment building to try to draw him out to shoot him. So it was just this constant, like someone's trying to kill you, and it's the federal government with the full force and resources of the FBI and J. Edgar Hoover personally targeting you. And they ultimately were able to charge him with this murder, and he'd become friends with Bert and with nowhere else to go. And that's part of the success of COINTELPRO. It cut him off of all of his allies in the movement, and locally in Oakland, where he didn't know how to trust. He had a safe haven in Hollywood, and he fled there. They bulldozed the car and hit him out, and ultimately hatched this plot of getting him to Cuba under the guise of making a movie. And they all had code names. This guy's the producer, that guy's the director, Huey is the packager, the star, and the story is about how the producer got the star to Big Cigar, aka Cuba, without landing in the pokey.
All right. Again,
and
was
crazy stuff happens along the way.
We'll go there.
Yeah.
Like what?
I don't want to spoil too much. But there's a shootout that was real in Cantor's Deli. They hired a pilot to, like, somebody's drug dealer who was known for making runs to South America, to build an airstrip and fly him to Huey. But the guy pocketed the money and tipped off the mob, who already had a hit out on Huey. So they came down to Hollywood and took a shot. They hired a boat, and I don't want to get into too much what happened with the boat, but it will blow your mind when you see it. But that's all true. You know, it's just a series of like any production, things went, especially when you're dealing with 70s Hollywood, things are going crazy.
Yeah.
These guys are putting out fires, and Huey at the same time dealing with, he's at, what I loved about the story is he's at a crossroads in his life where he really has to reevaluate everything and get back on the beam, because he had made a pivot from, you know, you're used to seeing the Black Panthers. You look on Google, you're going to find a bunch of images of guys with guns. But what you don't see is that they were getting up at 5 a.m. every day and feeding Oakland school children in a program that's still in operation and feeds millions of kids. You don't see that they built housing and education and hospitals and ambulance service. They built a factory for clothes and food. And so that's what he had pivoted to. And that is why the FBI declared war on him, not because of the guns, but because he was doing these programs, and they saw these programs could work and people were going to want change. And so they declared war on him before he could, you know, usher in this revolution that he was talking about.
Right.
They saw it was real and that he could do it.
Jim, hang
and they
on.
tried to break him.
Jim, hang on for a second. We got to do a little bit of news, but we're going to come back and we'll continue with you. We're talking with Jim Hecht. He's the creator of the Big Cigar, joining us from LA. As we said, this is going to debut on Apple this Friday. So we'll continue our conversation. I am also, you know, kind of curious why this hasn't been done before. So we'll get into it in just a moment. Hey, right now, though, World and National News, we go, and Amy Morris. Amy, take it away.
All right, thank you, Carol. Israeli troops and tanks are pushing deeper into the Gaza city of Rafah. Military officials say they're targeting Hamas in precise locations in an effort to avoid any civilian casualties. The Biden administration has threatened to withhold arms shipments to Israel if it does conduct a large-scale invasion of Rafah without a credible plan to protect civilians. Treasury Secretary Janet Yellen says she wants China to not mount any major retaliation against steps that Washington may take to safeguard investments in critical new industries.
The president believes that it's critically important for the United States to have a role and a presence in strategic industries like semiconductors and like clean energy.
Yellen was speaking in Stafford County, Virginia, on her latest domestic visit to showcase investments enabled by President Biden's policies. Archegos Capital Management founder Bill Huang is on trial for fraud and market manipulation charges. He's arguing he's not responsible for the other side's losses. The first witness to testify was Brian Fairbanks, a former risk manager for UBS, and he told the court that, quote, all the information they shared with us was lies. UBS lost more than $860 million as an Archegos counterparty. They've sent the jury home now for the day. Donald Trump's former attorney and so-called fixer Michael Cohen has been on the witness stand and has directly implicated the former president in a hush money scheme, telling jurors during today's highly anticipated testimony that Trump told him to, quote, handle it after learning that a doorman had come forward with a claim that he had fathered a child out of wedlock. Even though that story was deemed unfounded, the Trump Tower doorman was still paid $30,000 to keep quiet. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From Bloomberg World Headquarters, I'm Charlie Pellet. Wall Street kicked off the week on a cautious note. Traders positioning for key inflation data that will help shape the outlook for Federal Reserve policy and global financial markets. S&P today did decline, little change, down by a point, ending the session at 52.21. Dow Industrials down 81, drop there of 0.2%. NASDAQ up 47, a gain of 0.3%. 10-year 4.48% with a 2-year yielding 4.86%. Spot gold today was down 1%, 23.35 the ounce, and West Texas Intermediate crude up 1.2%, 79.23 a barrel. Bottom line here, mixed markets. Ben Benesh is co-founder and portfolio manager at Tourbillon, and right here on Bloomberg Business Week, he told us he sees opportunities outside of the United States.
The broad opportunity in terms of valuation is a lot more attractive overseas. And that's clearly skewed by individual companies, individual sectors. So, for example, the Magnificent Seven, obviously around 30% of the S&P today by weighting, and which on aggregate trade at over 40 times trailing 12-month gap earnings.
And again, S&P fell 1 point to 52.21, down less than 0.1%. GameStop shares surged today by 74%. The speculation swirled around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. Again, GameStop up 74%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Still with us right here on Bloomberg Business Week. I'm Carol Massar, along with Bailey Lipschultz, in for Tim on this Monday. Still with us is Jim Hecht, creator of the Big Cigars we mentioned earlier, also behind the TV series Winning Time, The Rise of the Lakers Dynasty, and he's also done a lot of other stuff. Before we move on, Jim, I do want to ask you on the Big Cigar and telling Huey Newton's story, I mean, why do you think it hasn't been done before? Like, he's a really interesting individual.
Yeah, I mean, I think there's like at least 450 years of history beyond that question.
Fair.
I think it's heartbreaking, you know, that there hasn't been a Huey Newton movie. That, you know, there's a lot more story to tell, and somebody should do the 8-season Panthers, you know, Game of Thrones, gigantic epic series about you know, everything that they did. I think it is, you know, it's hard to get stories around people of color made. Then you have other dirty words like politics, and people don't want to do political and period. And, you know, it's just, those are things that I think are turnoffs.
How was it hard for you? How hard was it for you to get this done?
I've been working on this for 25 years. Like I said, this was my thesis project at USC. So, yeah, I mean, it's been, you know, it all came out of a personal bottom for me, where I had this conversation with myself, which was like, you can no longer do stuff that you like anymore. Just do stuff that you love. And you can't try to make shows that you think people want to watch anymore. You have to make the show that you would want to see. And that led to, you know, I think it was the day after that self-conversation that I found the book that became Winning Time. And then people were like, what else do you want to do? And I was like, this is the story I want to do more than anything else.
And as you've mentioned, 25 years in the making, you cast Andre Holland to play Huey. What went into the casting process, again, given the length of time it's taken you to get this across the finish line, and what stood out about Andre?
Well, that's it. I mean, I thought that's the one person that should do this. Like, I watched Andre in The Nick. I think that's the first time I really became, you know, aware of what he could do. And I think he's one of the greatest actors living today. I don't know anybody that I would say is better. And I mean that. And not only was he, I mean, he is breathtaking in this role. He is incredible. And not only was he incredible on camera, but working with him, he fought tooth and nail to make sure we got it right, to make sure that the perspective stayed with Huey, to make sure that we didn't dip into any tropes. I mean, Andre was in the details and is just an incredible creative partner and an inspiring actor to work with. And we were blessed. So when his agent called and said, what about Andre Holland? I was like, you don't have to, like, that's it. There's a list of one. That's the guy I want.
And Jim, I'm a big fan of nonfiction. When you're working with stories based in reality and you're trying to hold them up, you know, it's kind of like what we do in journalism. How does that impact your ability to stick to a script and make sure that you're delivering what actually happened and not kind of fraying too far into reading between the lines or kind of implying what could or could have happened?
In this one, we felt more of a responsibility to stick as close to the truth as we absolutely could. In certain cases, we had to combine scenes just because of budget, basically, because we wanted to portray certain things. We didn't want to lose them, and we wanted to, you know, I think your guiding principle is stick to the capital T truth of the story that you're trying to tell and the characters that you're representing. There were like a few things that I mean, I'll give you one example. Like, we had a bombing. There's a bombing portrayed in one of the social programs, And I don't know that that went down that way, but it is reflective of the measures that people took at the time against the Panthers. Like A-Trap Brown's car was bombed. Fred Hampton was shot in bed. You know, like it is indicative of the kind of things that happened. And so we wanted to portray that they were opening this thing, and B, also get across the measures that the FBI took against the Panthers and COINTELPRO, and that this was indicative of the kind of things that they did.
What did you learn in the process? This is obviously someone that you, like as you said, did your thesis, you knew a lot about, obviously, knew the subject, the history, but what did you learn in the process, Jim?
Oh my God, that is a great question. I mean, well, first of all, when I first became attracted to the story, I was sort of, and this is an overshare for television, radio, I was sort of in the midst of becoming an addict myself. And so I was attracted to certain elements of 70s Hollywood that I thought were heroic or really cool. And I got sober in 2001. So in the 22 years that followed, my perspective on this story has shifted a lot, because I do think these are incredible people, two incredible people who were derailed by addiction, and mental health not being the topic that it was in the early 70s, particularly for men. You can just kind of, see the way that the insidiousness of addiction and mental illness sort of took away two great thinkers from our times. I just think you don't know what you don't know. I came into this as someone who studied a lot of radical politics, and just every day was a constant, checking of yourself of what tropes are you bringing to this process. Like, how are you thinking about things? And I think when you consider yourself as sort of like, for lack of a better word, liberal kind of a person,
right?
It's surprising at first to see how much is, of your own thinking is out of line and needs, a little bit of a step back. And fortunately, I worked with people that could explain things to me, in a way that it was just a constant learning. Every day was a learning experience. And that's part of the great thing about this artistic process on this show is like, I didn't even know how much it was going to be like putting myself out there. Like, people are going to see what you think when you pick up a pen and start writing.
Well, I think it's safe to say that the last few years, and really coming off the pandemic, and just things that we continue to learn about our history as a nation and just people in general, like things that we just actually don't know a lot about. And so it's this series and other things that really kind of help fill in some of the gaps and have these conversations like you've been having, it sounds like, with yourself. Jim, so fun to get some time with you. Good luck with it. Jim Hecht, creator of The Big Cigar. Catch it because it is making its debut on Friday on Apple TV+. Jim, take care. Jim joining us there in LA. All right, folks, getting ready to wrap up almost on Bloomberg Business Week. Carol Master, Bailey Lipschultz. This is Bloomberg.
news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Boeing says it is expanding worker training and adding new tools as it addresses breakdowns in its manufacturing processes. Plane maker has added about 20 to 50 hours of additional training per employee in manufacturing and quality roles. That according to the company in a statement. GameStop shares surged today as speculation swirls around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. GameStop today up 74%. Goldman Sachs CEO David Solomon says he would like to see more focus in Washington on spending and the debt.
The level of debt in the United States, the level of spending is something that we need a sharper focus on and more dialogue around than what we've seen. We obviously had a pandemic. We made a bunch of decisions, in that pandemic, but we're long out of that pandemic, and the spending levels, are continuing at a pace that I think is raising our debt level and creating issues for us down the road.
Goldman Sachs Chair and CEO David Solomon sat down with Bloomberg's Jonathan Ferro while attending the Choose France Summit in Paris. Business leaders are attending the annual summit as the country pushes to attract more foreign investment after a long period of economic decline. Tesla up today by 2%. Tesla has begun hiring back some of the almost 500 members of its supercharging team that CEO Elon Musk dismissed late last month. Musk's dissolution of the team stunned the broader electric vehicle sector. Again, Tesla shares today did advance by 2%. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up. Yoo-hoo, the Monday edition of Bloomberg Business Week. I know Doug, I know Carol Massar, Bailey Lipschultz, Tim is out, Doug Krisner getting ready for the Asia Open. It's your Tuesday already.
What did you talk about today? Did you talk about the tariffs that we're expecting this week from the Biden administration on Chinese goods?
Well, we ran some of the interview with Janet Yellen,
Okay.
U.S. Treasury Secretary, who kind of, didn't confirm nor deny.
Okay.
But nonetheless, yes. And we talked about it with our Mike McKee and Liz McCormick about, tariffs, what does it mean for growth and inflation concerns? And that's not necessarily great.
Well, in the political year, one of the things we learned last night in our reporting, or in the reporting of the Washington team, was this is being framed at an event this week at the White House in support of the American worker. So let's not lose sight of the fact that we're in election year. And the Biden administration
Wait, there's an election?
Yeah,
Doug?
we're really struggling now to get credit.
Yeah.
The administration
No, I know.
is for a lot of the reshoring that's happening, Chips and Sciences Act. So, the other part of the story, I think, too, is to send a message to Beijing that we're very serious about this issue of overcapacity. The EV tariff it's almost laughable at 102.5%. From the current level of 27.5%. But we don't import right now. We do not import Chinese EVs.
It's a strong message.
Right. But
That's what
this is something that has been reinforced not just by the U.S., but the Europeans as well, particularly Germany.
Yeah.
Well, and with that top of mind, when you look at how it's being kind of seen in Asia, the U.S., we talked about it, but it still doesn't feel like a trade war is top of mind, at least when I talk to portfolio managers. Is it top of mind just given the exposure from China and Asia?
Well, one of the things that I will say about the Chinese economy, the reason that it is, one of the reasons that it's holding up as well as it is right now is because of the export story.
Mm-hmm.
So they're very cognizant of the importance of not only the American market, but the European market as well. They don't want to lose that momentum because it's
Tick
helping
off
with
everybody around the world because you'll have nobody
well,
buying
but there's
your
a lot
stuff,
that
right?
the U.S. has already done.
Yeah.
The export controls that we have placed on certain areas of high technology, which has had an impact.
Yeah.
If you speak to some of the experts in terms of where China is right now in the AI story, maybe a year or two behind the U.S., and that's a big gap.
Mm-hmm.
So that a lot of the U.S. policy has already been effective in demonstrating the seriousness that the United States has in kind of maintaining a level of control. I don't want to say superiority, but what's happening is we have technology that it's a level far above what China's been able to come up with so far. And the United States is aware of that and is going to hold on to that.
Well, when we look at, and we're talking about the week ahead from an economics perspective, we're talking about inflation data. Is that going to be something that, like, is your bigger day this week Thursday because you'll have U.S. Inflation data out?
Well, it's a strong dollar story. If inflation remains sticky, that's been one of the problems. I mean, whether you're looking at the Chinese currency or the Japanese currency, the strong dollar is definitely having an impact in terms of the way in which some of these currencies are being traded right now in Asia. And if you look at Japan, the intervention story, Bank of America today, I was looking at a note, they were really kind of pushing back against the idea that there's going to be a lot more concentrated or focused intervention. But you got to wonder, go ahead, what were you going to say?
Well, you know, I was thinking off of Milken, and there were folks who were like, I know what you're hearing about the pushback against globalization, but it's globalization. It's, you know, the horse has left the barn or whatever the expression is. Like, you can't roll it all back.
I don't know. I mean, the New York Times today, Robert Lighthizer that was profiled. I mean, he obviously a trade official in the last Trump administration, whether or not there is a kind of a revisitation of those policies now, maybe a harder line. To the point that you raised, Bailey, how is Beijing feeling about this? Couple of things. Right now, they're still dealing with deflationary trends in the Chinese economy. But the other thing is that there may be a lot tougher line coming down the pike here if former President Trump is reelected.
Yeah, a lot of things. I'm tired. It's Monday. It's done.
Monday. Come on, get over it. Drink coffee.
All right, be sure to catch Daybreak Asia with Doug and Brian. That's going to do it for us. Balance of Power starts right now.